The fee room may be facing a major breakout into higher price zones, and I'm talking about around 3,000 to 3,100 US dollars. You can also see this in the current cycle. We are currently in the last area of significant volume support, and after that, there is really a low volume zone that could take us to price levels around $3,100. What currently supports the idea that Ethereum can really continue to pump? Number one, BlackRock. BlackRock has been accumulating huge amounts of Ethereum for weeks. They have even sold some of their Bitcoins and shifted those funds into Ethereum. You can see this on the Arkham side. For several weeks now, a large amount of Ethereum has really been purchased here. At the same time, they're currently doing the following. They are sending Ethereum from their BlackRock Ether wallet to external wallets to cold wallets, and there the funds are being split up. From an institutional perspective, this is a hodl mode, and this could actually indicate that they believe in Ethereum and in higher price targets. Why is that? In one of my recent videos, I also mentioned that BlackRock is heavily speculating that the Ethereum staking ETF will finally be approved. Because if this ETF is approved, then they themselves said this would be a milestone for Ethereum, since the customers of this ETF would not only benefit from a price increase in Ethereum, but they would also profit from the staking rewards. And now, just imagine this is something we haven't seen before on such a large scale, that we have major institutional investors who, in this case, currently own 1.5 million Ethereum and would probably stake a large portion of it. And this compound interest effect would of course greatly benefit these clients. But why are these price targets so interesting right now? We'll start by taking a quick look at the weekly chart and then move on to the daily chart. We're only looking at this from a long-term perspective. I'll also tell you why there's a possibility that we could actually see a small correction again. But if we look at the liquidation heat map, you can see that at a price of $2,875 US dollars, there are about 10 billion in liquidations. And $2,875 US dollars is actually not very far away. We haven't quite reached that yet. We were at 2,833. But that would be the next price point we should break through to the upside with confirmation, because after that, and this would also be the key level if we actually trigger that liquidation and break through with confirmation. And I can quickly sketch that out in advance. What would be ideal is a small breakout, a retest in this price range, and then to reach the next possible price target around $3,000 to $3,100. What exactly is in this price range? That's exactly where we are right here. At $3,050, there are another 3.7 billion, and below that another 1.8 billion. That means this price range here would also be super interesting so that it can be reached, allowing Ethereum to make its next stop here and enter this nudist is the price range we have resistance zone. And that's what we're going to analyze in detail now. At this point in time, unfortunately, Ethereum hasn't managed to do that yet. Locally speaking, as I said, we are already in an area with lower volume, but the weekly candle would also need to close within it. But we must not forget that things can move very quickly with Ethereum as well, because in this volume range, with this weekly candle, bullish news, maybe even the staking ETF, if for example it gets approved, could suddenly break, and we'd know, okay, BlackRock and other ETFs could then offer staking ETFs in the future, so that we simply get another truly rising candle, similar to what we saw here. Confirmation is often prepared for such surprises, and we can see that here. So we had increases, consolidation, and then simply continue to rise. And there we had 1, 2, 3, 4, 5 bullish candles, weekly candles that actually resulted in a price increase of around 77%. That would of course be very optimal here. But what would the long-term price targets be? Because now on the weekly chart, the local high in this cycle is at 4,094 US dollars, or roughly around 4,100. If we now look at this in the Fibonacci range and take the last local high from this cycle and the low, if you don't know the Fibonacci video from my channel yet, check it out. There I give a complete explanation of how to read these, how to interpret them, and also how to trade using them. Right now it's actually very advantageous, since we've had 1, 2, 3 rejections at the 0.5 retracement. Because actually if we draw it from top to bottom, that would be a possible negative scenario. We now have a 50% chance of being rejected. Here we have a 61.8 or rather 65% chance of being rejected. But if we look at these Fibonacci levels now, closing above the 0.5 would already be ideal, so that we can then, due to this area with lower volume, make our way toward the 0.618 Fibonacci, or rather 0.65, and there we would have exactly the price zone I mentioned between 3,000 and about 3,100. And of course that's ideal if we reach that, but what would the bigger price targets be after that? And there, if we break through this local high here at 4,100 to the upside, we would have around 4,841 as the next price target. And if I draw that in here now and add a horizontal line, take a look at where that would be. That would also be at about the last all-time high that Ethereum ever had. And that was in the last cycle, and that would be the next exciting price area if we actually break through that as well. We can see here from a Fibonacci technical perspective, that's also a very interesting level, 1.618. That would be around 5,780, and that could also be reached. But here we're really talking about an ultimately bullish scenario. If everything goes according to plan, staking ETFs get approved, and all the ETFs in general continue to accumulate, then that would of course be super ideal. But what do we have now on a smaller time frame? If we look at the daily chart now, there's something that doesn't look all that good to me at the moment. You can see here, this green key level up here is the next key level that we should be reaching, but at this green key level, we've now had 1, 2, 3 rejections, and on the 4th attempt, at least for now, we haven't managed to break through it to the upside. We really had it actually, right on point. Take a look at this. On point, a candle close, another quick wick theory, and now we're seeing a small correction. What could indicate a correction? We now have two possibilities. And where would this correction go? If that's actually the case, then let's take this candle close and draw it to this candle close. And then I want to show you something on the RSI. I don't really like this right now. This is a bearish divergence. I also have a video about this on my channel. You can check it out to see how to trade and identify bullish and bearish divergences in detail. Here we have this falling RSI, but at the same time we have this rising price, and that's actually how you trade it by looking at all of this at the candle close. That would actually be correct. This is the last highest candle, and here is the last declining candle. So this isn't really ideal right now. If we actually do go down now, where could that take us? To what prices? And we can also determine that very easily using Fibonacci analysis. If we take this low to this high, to the current one, and if we really don't continue to rise now, we would have a price level from 0.618 to 0.56, which would be roughly 2,540 to 2,550, which locally speaking for this consolidation we're seeing would also be the largest volume area. But that doesn't necessarily mean that we have to go down there. If we actually do go down, that would be an opportunity to open new long positions, and in this case with low risk, because this volume area could really provide us with strong support again and then catapult us to higher prices. Finally, that would be the optimal scenario if this divergence now plays out. What could also be a reason to go a bit lower, if that actually happens, would be this ascending trend, because if we look at it now, we can see that we haven't managed to do that either. We tested this candle high here, tested it again, and now we've had a double test at that level. That means we are in a trend channel here, which could actually bring us down to 2400 again if we fail to hold the support. Let's compare that with the liquidation heat map, and I'll zoom in a bit here. This is really just looking at the long term, but at a price range of around 2400, we currently have about $8 billion in liquidations again. Of course, there are also quite a few liquidations below that level, but that would really be a worst case scenario, because if we actually fall below these lows that we've reached here, things would look suboptimal for Ethereum, and we could indeed see even lower prices. Overall though, I am very, very bullish. I have to be completely honest about that. Why? Because we have so much news surrounding Ethereum right now. BlackRock certainly isn't accumulating massive amounts of Ethereum for no reason. So that's actually a confirmation that they are not ready to sell right now. But as I just showed, they're currently seeing huge outflows when it comes to Ethereum, and they're actually sending it to external wallets. We also shouldn't forget that we're in a bullish trend. After this long, truly bearish trend that we finally had a break in the structure. Following the structural break, in this case, we saw a massive breakout and a strong consolidation. And I mentioned this in one of my previous videos, for those who might remember. It was here, Ethereum history repeats itself. And in that video, I talked about how we need to break out to the upside here. And it would be ideal if we consolidate here now in this case, because what did we see on the daily chart? You can see that very clearly as well. That wasn't so good. We actually had an overbought RSI of around 85. And at that point, I also thought it would be ideal if we consolidated a bit in this area and used this consolidation to gather liquidity and then create a breakout to the upside. What still bothers me a little at the moment is this bearish divergence. However, that can be invalidated very quickly with a breakout candle similar to the one we see here, with a massive breakout candle to the upside followed by new consolidation, catching our breath again so that we can repeat a similar pattern and consolidate a bit in this area once more. The RSI can calm down again and then make the next breakout to the upside. That would be my current analysis. So for now, I would speculate on prices around $3,000 to $3,100. If we actually move downward, then I would be ready to open new longs here. But what I would also do, with a confirmed breakout to the upside here, I would scale my swing longs, which I already have open. I have 2 positions open there. I would then scale these positions. Here, I would take partial profits again. If we also manage to break out above this price range, then I would scale again and take partial profits once more. And that's exactly how I would do it all the way up through each of these individual zones. And for me, the most interesting areas are actually the individual Fibonacci zones, where I say, if we manage to have a confirmed breakout above the 0.5 level, I scale, take partial profits, And in that case, at the 0.618 level, if we actually manage to get above that level again here, then I scale again, taking partial profits at the 0.786 level. Then I would scale once more if we break through the last local all-time highs here at $4,100 to the upside, because then my price target would be from around 4,800 to about 4,900, the last all-time high. And then I would be cautious and take a closer look at what Ethereum is really doing in detail. What do you think about that? What's your assessment of Ethereum? Leave me a like if you're new to my videos. Of course, I'd also really appreciate a subscription to my channel, and we'll see each other next time. Bye bye.